Hey, what's up, family? My name is Brehon Mills, and I'd like to welcome you guys back to the channel where we love focusing on our own financial and personal development. Hey, family, today I just want to do a quick video on index funds and ETFs. Now, index funds, if you've been following my channel, you know I speak very highly of index funds and ETFs. You know, these funds actually have a fund manager, and these fund managers have a team of people that report to them. And so what this team does, they take a look at a vast majority of stocks. They look at earnings reports. They look at potential. They look at annual growth. They look at all the threats and opportunities within that specific stock. And they report what they find to the fund manager, right? And so these people can do way more deeper research. They could take deeper dives into these companies that you and I could ever do, right? And so what they do is they report to the fund manager, and if they report negatively to the fund manager will say, hey, we don't want that company in our fund. Let's kick that company out, and let's bring another company into the fund that has the potential for growth, right? And that's what, index funds do. They look for great opportunities to add to their fund, right? And that's what I love. So I own Vanguard. I have two different Vanguard accounts. And what Vanguard and so when you own these funds, what they do is they send out a prospectus, and they give you a overview of the performance of the fund, and they talk about how much the fund has grown, the type of holdings they have, what the annual fees are, what the percentage rates are, what the minimum and maximum investment that you can make into a fund each year. And so what I have is the perspective of Vanguard. So Vanguard, they sent me an email today, pretty much sending out the perspectives. So the prospectus, again, is a summary of the overall performance of the fund. And what I want to do is I want to get down to the most important part of the documentation. So they do talk about the fees and expenses. Let me see here. Annual total returns. And so this is what's the most important. So when you start to make decisions on what type of fund you want to invest in, this is the type of information you want to check out: the annual total returns. And this is the annual total returns for Vanguard Prime Cap. This is a fund that I own. And so it gives you, the highs and the lows, because again, there are years where these funds perform very well, and there are some years where they aren't performing very well. And when you are long-term investors, we love the growth, right? We love the growth, but we also love the down years. Like 2018, it was minus 2%. This is the time that we love, because we are continuously buying and adding to the fund. Now we are buying these stocks, we are investing in these ETFs and index funds when the market is down. So we are buying more. We're adding more cost dollar averaging. We are buying a lot more. And so when it does rebound to that 27%, man, we have made a tremendous amount of profit because we bought more during the down years. And so that's what I love about, these ETFs. So let's take a look at the average investment. So these are the average annual total returns for the periods ending in December of 2021. Now, if you would have had this fund for just 2021, your average return would have been 21.8%. That's outstanding, right? That's outstanding when you think long term. Now, what if you would have just had your money in the S&P 500? You would have had a 28%, right? 28% return. The Dow Jones, 25.66%, over 25% return on your investment. Now, what if you would have had your money in the prime account, the S&P and the Dow for the last 5 years? So the last 5 years, your annual return would have been 18.29%. That's annual growth, right? 0.29. If you would have had it in the S&P, it would have been 18.47. If you would have had it in the Dow Jones index, it would have been 17.92. All right, 10 years. If you would have been investing in this Vanguard Prime Fund Investor account for the past 10 years, you would have averaged over 17% return. Now, I've been investing in the Vanguard account since about 2010. So I think I just jumped in those accounts. So it's been about 12 years. So I've had a phenomenal return in my account. And so we have 17.52%. The S&P 500, 16.55%. Dow Jones, 16.24%. Now, let's look at the calculator and let's take a look at how your money would grow over time. A lot of times we really can't see how our money will grow just looking at those basic numbers. So let's take a look, right? And so here I have a calculator. Now, let's say that you're starting with only $1,000, right? And so we're going to give that money 20 years to grow. And here annual rate is 6%. So again, the Vanguard accounts is giving us 16, 17%, right? So let's just do a modest 15% return. So if we invested $1,000, that's our starting point. We have 20 years to invest in it. We want this to compound annually. So how much of a contribution will you make? Let's say you're going to make a contribution of $1,000. $1,000 per year to this account. So let's do the calculation. So if you started with $1,000, invested for 20 years with the 15% annual return on your money, in 20 years, you would have $1.3 million. $1.3 million. Now, $1,000 annually is less than $100 a month. Now, if you are serious about investing, if you're serious about your future, why couldn't you why couldn't you pay $100 a month, which is $1,200 a year? And let's calculate that. That would equate to $1.6 million a year, right? Now, what if you contributed $200 a month to your investment account? That's $2,400 that you contribute in a year. That would equate to over $3 million. Over $3 million. And you can't beat that. Now, why wouldn't you want to invest in your future? Why wouldn't you want to position yourself so you could retire with $3 million, starting with just $1,000? Anyone can do this. You can do it. Anyone can do this. Now, what if you decided to put in $300 a month? That's $3,600. $300 a month, invested for 20 years with an annual compound rate of 15%, equates to $4.7 million. Now, you can do it. You can do it. Again, we're going to have some down years, so it won't always be, well, let's take a look. Let's go back to the Vanguard. So it does says it goes back 10 years, but it doesn't go back 20. But even if your, Now, even if it grew 10% a year and you put in $200 per month, what would that equate to? Annual compensation. $200 a month, that would be $2,400. $1.73 million. Now that's something to think about. That is something to think about, family. Your future is important. You can create generational wealth by investing $100 a month or $200 a month. The choice is yours. All right. Now that's all the information I have for today, family. I hope you guys have enjoyed this information. Hey, listen, hit the like, hit the subscribe, and keep coming back for more wealth building information. Peace.